Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Craig Erlam, Senior Market Analyst at Oanda. It's the 15th of March. Great to have you on the show, Craig.
It's great to join.
Now, Craig, before we get your insights, let's take a look and see how markets have performed in the first half of the day. We start with cryptocurrencies. Bitcoin is at 24,796. It's up again 1.52%. Ethereum is also up. It's at 1,702, up 1.61%. If we look across the regional stock markets, the SGX is up 1.1%. Bursa Malaysia is up 0.85%. Shanghai is up 0.64%. The ASX All Ordinaries is up 0.74%. The Nikkei is up 0.09%. The Hang Seng is up 1.16%. And we round up the numbers with the Kospi, which is also up 1.44%. A sea of green, everyone is up. Craig, tell us why.
Well, I think we're seeing a little bit of a relief. I mean, obviously, it was a very rocky start to the week. The events with SVB that was spreading into other small to mid-cap banks in the US really did shake the markets. There was enormous uncertainty about what was going to come next. The fact that we had to see such strong intervention from the Federal Reserve, but also the US Treasury. And then, of course, here in the UK, we had the UK Treasury combined with the Bank of England and HSBC looking to save the UK arm. It really did shake the markets. The question being who's next and what kind of further ramifications are there going to be? And so far, it seems to be quite minimal. It seems that the actions taken by these agencies has been sufficient to stem the bleed. But I still think there is considerable uncertainty. I think it's going to take time for confidence to fully return in the markets. And this is one step forward, should we say, towards achieving that. But I think the next few days is still going to be extremely nervy.
Now, yesterday, the CPI number came out for February. 0.4%, annualized increase of 6%, pretty much in line with expectations. That's also likely to keep expectations in track of a federal rate hike. But at the same time, while we have, as you said, strong intervention from authorities, the uncertainty around the banking and banking stocks obviously has not abated. We've also had Moody's just this morning cutting the outlook to negative on the US banking system. With all of that around right now, what's your view on the Fed meeting next week and the possible impact of rate hikes next week?
So I think 25 basis points is still the most likely outcome next week. It is going to be something that's going to be a hot topic, I think, at the policy meeting. I think we also have to distinguish, though, between what the Fed's monetary policy goal is and how it manages financial stability. It has other tools at its disposal outside of monetary policy in which to do so. And we saw an example of that over the weekend. Of course, it doesn't want to be the cause of its own downfall in many senses. So it means that it is going to be a little bit more of a two-way debate in terms of what the correct policy path is going forward. But we shouldn't be in any doubt that if their projections show that inflation is not going to fall close to target over the medium term, then it will continue to raise interest rates. What it probably does do is take 50 basis points off the table, and I think that's correct. I don't think 50 basis points was ever a sensible policy move after slowing down the pace of tightening, given the aggressive pace at which it has tightened over the course of the last year. I think 25 basis points was always a sensible policy move. But as we've seen in the markets, it's not just about this meeting. The repositioning that we've seen since Friday in the markets with regards to the next few interest rate moves and what we're going to see later in the year has been a dramatic shift. So now these forecasts are going to be absolutely crucial from the Federal Reserve in terms of dictating sentiment and also getting an idea of how they perceive the risks to be on the financial stability side and what they believe the correct course of action to therefore be. If nothing else happens, I do think we'll continue to see a few more 2 or 3 more 25 basis point rate hikes. But of course, it's very hard to look into the future at this point, because in much the same way we didn't see this coming at the weekend, there's a lot of the inflation narrative that we haven't seen over the course of the last 18 months appearing, and I think there's plenty more surprises still to come.
Now, I want to move on to your neck of the woods. We've had UK jobs data that's come in that's in line with expectation. Unemployment at 3.7%. What's your view on the Bank of England's thinking around rate hikes in the upcoming meetings, and given the overall global scenario as well as the scenarios within the UK?
So I think the most important part of the labour market report was that wage growth is slightly slowing, and I think that's an important thing for the Bank of England. Of course, they would probably like to see unemployment ticking ever so slightly higher in order to create some of that extra slack in the labour market, remove some of the manpower ultimately in the wage negotiations, which could help to drive wage growth to more sustainable levels. But I think they'll be looking at that labour market fit report and say that's fine for now. It already was projecting inflation to fall 4% at the end of the year, and crucially, there was already 2 policymakers at the last meeting that voted against that last rate hike. So that's going to create a lot more debate on the MPC as to the path going forward. There could even be an argument for cutting rates pretty soon among those 2 policymakers who previously voted to hold. And like I say, if you look at the narrative that we've seen from the Bank of England for the last few meetings, there does seem to have been a cautious narrative, one of we know that inflation is still too high, but we do expect it to fall quite dramatically due to favorable base effects, lower energy prices, etc. And therefore, there is clearly a growing belief that we are nearing or almost right at the end of the tightening cycle. And I think that's going to be the most interesting thing to come from the Bank of England in a week or two's time. It's going to be how close are we actually to the end of the tightening cycle? Does events change of the last week change that at all? And should it? And then, of course, what's the impact of the most recent data? And I don't think the most recent data, to be honest, has been a game changer on any front.
Now, Craig, final question, really around opportunities. We've got a lot of uncertainty, and when there's uncertainty, there's trading opportunities. Where are you seeing trading opportunities right now?
So I think, from my perspective, I think the markets in January went far too optimistic, far too optimistic. Then, in response to the January data, the month later, they became far too pessimistic. And these wild swings, I think, has been really prevalent and really evident of the uncertain sentiment that we have seen in the markets. And I think now, based on the events of the weekend, I think the markets became far too dovish. I think the negativity which spanned through the markets was far too negative, and of course that was to be expected, because if this had turned into a full-blown banking crisis, the ramifications could be much worse. I would say that there is still risk that the financial sector could be hit harder if 1 or 2 more medium-sized banks do start to fall into financial turmoil and force more intervention from the central banks and from other institutions. And therefore, I'd still take a very cautious stance, but I would just be aware that there is the potential for these markets to swing back a bit to where they were. That means more rate hikes being priced in, higher bond yields, maybe gold taking a bit of the froth out after that tremendous rally that we've seen, and equity markets bouncing back a little. But the massive caveat there is we need to see no more events in the financial industry, and we need to see nerves calming on that front. And then another interesting area, of course, is cryptos and what's happened there over the course of the last few days, which is frankly absolutely extraordinary, when one of the banks which we've actually seen go under was a crypto bank, and yet we've seen an absolutely incredible rally in Bitcoin and other cryptocurrencies. And I think that's certainly going to be one to watch, because there's something about that just really doesn't seem very sustainable.
Now, Craig, on that note, thank you very much for your insights. Thanks for coming on the show.
Thank you.
Now, we've been speaking to Craig Erlam. He's a senior market analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez, and this show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.